Good afternoon, traders. Welcome to our options recap number 3. So I'm going to turn on the stream on my phone so I can just make sure that I see everything and get the stickers and all that, because with StreamYard, this platform that I'm using, sometimes it doesn't show everything. So first and foremost, like always, let's start off by seeing where everyone is tuning in from tonight. So please post in the chat where you're tuning in from. I love to see the difference between East Coast and West Coast viewers so that I get a better idea of when to do these and what time I should do them. Okay, all right, so I got my chat over here. So we have Regina, Canada, from Karan. Welcome. And we have Jantasia from Raleigh, North Carolina. See Phoenix, Chicago, Georgia, Richmond, Orlando, Florida, Philly, Michigan, Los Angeles, Seattle. All right, so see a lot of different East Coast and West Coast. Central, I see also a lot of people from Florida, which is good. Orange County, is that Orange County? Is that Florida? Orange County, Florida. San Jose, California. We have Andrea here again. Welcome. So what we're going to do today is we're just going to really do a recap of the option picks for the week, talk about the different things how we could manage trades, how we could do things better, how we could protect our capital, all those stuff. And then we're going to also look at the trades from today and do some education behind that. All right, so I see 43-ish people in here, which is great. So let's get started. So the first chart that I want to pull up is Oxy. So Oxy came to our attention on the scanner on the 18th of June, right? Which is the Monday, okay? So yeah, so Monday, okay? Because Friday's close is on the 18th, and then we play the trade on the Monday. So one thing that I've been testing is basically using the robot that I told you guys about to take some of these trades for me and seeing how it performs. And let me pull up my fill for Oxy, and I'll tell you how the robot took this trade. So the robot took Oxy at 38 cents for the June 25th calls. And now those calls are at $1.64. So that's a pretty big win, right? Let me see. So let's get let's do this percentage gain. Let's just check that out. So 38 cents. And I want to talk to you guys a little bit more about like swinging options. Like, how do you actually do that? So 38 cents to $1.64. Get percentage. So that's huge. So 331%. So the bot did that. I didn't even do that. So I'm just testing the bot, and I hope that I can figure out all the little quirks, and then we can have something that works and that we can share with the community. So we got Beast Mode already donating that $1, getting the party started. So thank you very much, brother. That's going to go towards the Coffee Foundation Fund. I appreciate that a lot. Okay. So what I want to talk about is how do you play these, like my thoughts on these option plays. So obviously, when you play options on the inside bar, okay, what does it mean? So let's start off with that first. So when you're playing an inside bar, what happens to option premiums? So let me know in the chat. Does option premiums increase or decrease when we have an inside bar, so an inside day? So what it basically means is that for the inside day, we've been consolidating for the whole day. We haven't broken out of the previous day's range, okay? We have my brother here, see me, with the super sticker. I see it. It says new. All right. Thank you very much, brother. Appreciate that. Wait, did I get him? There he is. Nice dog. Love the dog. So decrease. So everybody got that. So that's good. So essentially, when we come into Monday, which is here, the option premium is cheap. So that's how I was able to make 350% on the trade, because the option premium is cheap. So now look at this bar, which is the next day. This is Monday's closed. Do you think option premiums are going to be higher here or higher on the inside day? So if you think it's higher on this big bullish bar, hit me with a 1. If you think it's higher on the inside bar, hit me with a 2. So what are your thoughts? 1, 1, 1, 1. Okay, obviously. So you guys know. Okay. So the whole point, what I'm trying to prove, is the reason we run the scanners is we want to find stocks that are consolidating. We want to find stocks that are losing option premium value, decaying, so that we can get them for a good price. Because it's not, in options, it's not just about picking the right direction, it's about getting the right timing. So the timing issue I'm able to resolve through using the scanners. Okay. And then another good example of this is the Marvel share trade. You see how we've been, we created a storm of death. We had a outside bar, inside bar, outside bar, inside bar, inside bar. So it became double. So this is just a ton of consolidation throughout this whole period of time. What do you guys think are happening to option premiums? While we're going sideways for 1, 2, 3, 4, 5, even we can count this. If we're going sideways for 6 days in a row, what do you think are happening to option premiums with Marvel or Marvel or whatever the hell it is? What do you guys think? I saw someone say staying the same. What do you guys think? Reduce? What else? Talk to me. Decay, staying the same, decay. Good. So now we're going to address, see, some of the people in the chat said stay the same because they're not familiar with options. So this is important. Options have an expiry date. Okay. So let's remember that. So write this down. If you have a piece of pen, if you have pen and a paper, write this down. Options have a time limit. Okay. They expire. They're not like shares. Common shares you can hold without having, you can hold it forever. It doesn't matter. Options have an expiry date. So if the stock goes sideways for 6 days, the premium is going to be dirt cheap. So that's why we play these picks. That's why I run the scanners. I run the scanners so that we can find stocks that are chopping around, consolidating, and looking for the next leg up. So then we can go ahead and get the options. And I'm going to show you guys another example of that. So let's look at Tesla. Okay. So let's go to the 2-week chart. So I shared this setup here in the newsletter. All right. So do I have the newsletter open? Don't think I do. Let's go in Telegram. Okay. Just want to share the news. I just want to show you guys in the newsletter. So I'll show you like how you can use some of these plays. Okay. So let's go down to the charts. A lot of people have been asking me about my discounts. I have a discount on Tradingview, $30 off, and then I have one on Trendspider. So if you want to use those to support me, I would appreciate it greatly. Here we go. So Tesla. So this one I gave on the weekend, Tesla 2-week chart. And I really liked it because it had 4 weeks of consolidating. Okay, so now let us go back to our chart. So now each one of these candles represent 2 weeks. So 2 weeks and 2 weeks. So 4 weeks, you see the blue bars mean they're inside bars. So we went 4 weeks in a row of going sideways, of going chopping around. So let me ask you guys a question now. Okay, and everyone should get this right. After those 4 weeks of consolidating and going sideways, what's happening to Tesla option premiums? What do you guys think? Someone says how to sign up for the newsletter. Just join the Telegram. So let's do that. Let me post it in here. I'm gonna post it in the YouTube, so hopefully you guys can click on it. Decaying, cheaper. Exactly. So let me tell you how I executed this now, okay? So I'm gonna go back to my bot. and I'm going to get the option price for you guys that I got in at. So I got Tesla. So because this is on the 2-week chart, right? So we have to get the options, they have to be dated a little bit further. We can't get them like to expire in the same week just because like each one of these candles represent 2 weeks. So if I look at this, I'll say at least I need 2 weeks, maybe 4 weeks just to be safe. Because what if Tesla starts to go V and does that push back up like this? I want to have enough expiry so that I can hold it for that time. So what I did here was I took let me find it, the Tesla July 16th, $950 calls. So 950 is obviously very, very far away, but that doesn't matter because they were going for cheap and I plan to sell them before expiry. Okay. So I got them for 57 cents. And right now they're at $1.62. So 3 times my money on that play. Okay. So what I'm trying to teach you here is just understand that we're using the scanner and we're looking for stocks that are consolidating. Like that's the whole point of this, because then we can get option premiums that are cheap. Okay. So here's another example. Like this one is a really good example here. This is an example of 2 weeks consolidation, and you can buy puts on this bar because it's been consolidating and you would have had a nice push down there. That's at least 4 or 5 times your money. All right. And obviously it's not going to work every single time, but when it does work, you can make between 3 to 5 times your money. So that's good. So you don't really need to win that much, that often. All right. So my style of trading options is trying to get in before the move, right? Like this is how, like you could see in the newsletter, right? Like I was trying to understand where Tesla is going to go before it goes. But you'll see a lot of people posting now that, oh, Tesla is ready to go, blah, blah. But it's already made such a big move. I've already made 3 or 4 times my money. And I also took shares. So what my point is try to anticipate where the stocks are going to go. If you're playing options, you need to have a visionary approach. You can't, if you buy options on Tesla right now, then you've already lost the game, because the point to buy was on Monday, right? And if we actually go down to a lower time frame on Tesla, we'll also see an inside bar which showed up on the 22nd of June, which was in the middle of the week. And this is the one that I posted on our option picks. So now this is what I like to teach you guys. This is what we call the fractal nature of trading. Okay. It's fractal because on the higher time frames, we're consolidating with inside bars. On the daily chart, we're consolidating with inside bars. So what do you think happens when consolidation meets consolidation? Something has to give. And look at this. See that? This is what happens. This needs to give. This is the explosion. So my philosophy is look for those stocks that are consolidating and look for those opportunities when premiums are cheap. All right. So hit me with a 1 if you guys understand all of that, what I just spoke about and my philosophy there. And I'm trying to help you guys there to just understand that you don't want to chase stocks when you're playing options because it's going to blow up your account. David right here, David Zeladon with a $14.99. So that is definitely going to get me a lot of coffee tonight. So very much appreciate that, brother. Thank you very, very, very much. So even if it's very out of the money with profit rate, well, like I said, I bought 950 calls for 50 cents and now they're $1.60. So it's not like I'm not going to hold it to expiry, obviously, right? So I'm not, so that's why I can make money on the short-term move. Okay. All right. Beautiful. So let us move on to the next topic. How does the bot pick the strike price? Okay, so let's answer this question. How do you handle risk reward with 1 contract for cutting a loser and 2 for initial play with the contract? How do you handle risk reward with the contract? Okay. And then this one, how do the bot pick the stock? I'm picking the stock. I'm picking the strike price for the bot right now. And the way that I'm doing it is filtering by volume I'm just using Yahoo Finance, which is like a free tool. And I'm just filtering by literally what's the most volume on the day. How do you handle risk reward with the contract? Cutting loser and sharing size initial play. So great question. So like I said earlier, whatever you put into option, you have to be willing to lose between 50 to 100% of that. And the rule is with your account, you should not risk more than 1 to 2% of your capital. Okay. So if you have a 10K account, that means you shouldn't be putting in more than $200 on a single option play. If you can't afford the option, then buy the shares. Okay. Buy the shares. You can buy micro shares. You can buy fractal shares. So there's no excuse not to take the play. And then, so sizing, that covers sizing, and then cutting a loser, like I said, you have to be willing, like you can have an automatic stop at 50%. You can put a conditional stop based on the price of the underlying, or you can just have basically know that whatever you put in could go to zero, right? Are the lottos on your Twitter swings in next week or day trades? They can be used as both. How do you select the strike for Tesla so cheap, and how do you know it would move? Well, I don't know anything, but I use my technical analysis skills looking at that. Like you saw, it was consolidating for 4 weeks, right? So that gave me an idea, like it's ready to move. I don't know if it's gonna move, but I'm taking a chance, right? And in terms of buying the strike, I just looked for the one that had the most volume because I know I'm not holding it till the expiry anyways. So I just need something that's liquid. Let me know if that makes sense. What trading app do you use for conditional trades? I use Interactive Broker, Trader Workstation. All right. So there we go. There's some background for you guys. Do you share a scanner with private room or purchasing of your book? Yes. In my private room, the scanners are there. It has a few of them. I haven't released all of them because sometimes it gives me wrong data. So I need to fix that. But in general, even if you run the scanner, you're still going to you can get up to 200 picks. So what I do, guys, is I go through the list and I pick the ones that I trust and I know that can make a move. So the scanner is not enough because you still have to go through and pick. So from like a list of 300 or 400 stocks, I'll get a list of 5 for you guys, right? And the way I do it, I go through the charts and I look for the ones that have traps and have possibility for squeezes. So thank you, guys. All right. So let's look at the trades for today. So let's talk about the storm of death with Marvel. Okay. So what we're going to do here, we're going to go to 5-minute chart and we're going to play the price action together. Okay. So let's hit the market replay and let's describe what's been going on. So if we just zoom out here, you can see that we've just been trading in a box. If we go to the daily, we can also see it trading in a box. Okay, so we can identify that. So at some point, we know the box has to break. All right. So what we can do is we can have a few lines on the chart to help us out. So this is the previous day's high. Okay. And so the first top red line here is near the previous day's high. And then this line here is near the previous day's low, which is right around here. Actually, it's more higher. It's up there. Okay. So this was the tight range from yesterday. And now we're going to play out the action and we're going to go through it together. So Michael says, where is scanner located in private room? It's in the pinned tweet. In the pinned tweet, I have all the resources there. Okay. In the T-Wars private. Okay. So let's hit that play. Oops. I don't want to skip anything. Stop. Okay. First candle. Somebody tell me what this is. Is this a gap up, gap down, or inside open? Somebody tell me, what is that? Gap up, gap down, or inside open? What kind of open is it? Gap up. Okay, we're good. Okay. So we have a gap up. What are the plays that we can do from this first 5-minute bar? What can we do? What are the strategies that we can employ off of this first 5-minute bar here? Orb. Exactly. So we can use the opening range breakout. But why would we want to do the opening range breakout here? Why does it make sense? It makes sense to do the opening range breakout because we're gapping up above the previous day's high. So how do you think The shorts that shorted here, here, and here, you can see they shorted. You can see that. How do you think they feel? The shorts are trapped right off of the open. So this is why the opening range breakout is a very powerful play in this situation. Okay? Because we know that they're already getting stopped out, we're already running, and then they might throw in the towel for the rest of the day. That's what we're seeing here. Something very interesting is if we look at the high of the day, which was 54.81, the low of the first 5-minute bar was 54.81. And what that looks like to me is an algo limit buy. So the algo had the limit buy on the previous day's high, and they got filled actually right there at the bottom of the wick. When you see algorithm action like that, those are usually signs that we're going to continue to have a move on the day because the algorithm is there to support that type of move. Okay, so let's continue. Okay, then you're rich. Done. That's it. You're rich. You're done. Literally 10 minutes, you double up, you're done for the day. Like that's literally the case right there. Doesn't get easier than that. But do you understand why this works? It's not going to work in every situation. Not every situation is going to work. It works because there's trapped bears in the play, and they get their stop loss, they get stopped out, they get stop run, and we have a huge push. All right. So let's just use where can we learn the orb technique? I have a separate YouTube video on orb, so you can watch that. So let's just say we take the opening range breakout like this, and let's say we put the stop loss about halfway through the candle. So if let's just see what the potential of this play is. Let's continue. Okay, so let me just fast forward here. Just want to see. Okay, look at this. Just look at this. That's 14 times your money. Okay, which is just absolutely insane. Literally. If you put in $1,000 risk right there, so if you put $1,000 risk, so you buy here, stop here, you put $1,000 worth of risk. If you use common shares right here, okay, if you use common shares, then you can make $14,000 at the high. 14,000 with that $1,000 risk. That's what that means. So this is just like absolutely just amazing trade. And in terms of the option plays, like I said, you could just take the orb. Okay, that's option 1. Option 2 is you could have had a limit order on the previous day's high if you were if you think like a robot. Option 3, I see this inside bar here. See, this inside bar is high. It doesn't break until over here. So you could have left your entry when it breaks the inside bar high. And then when we turn around like this, see, when we make this hammer, then you get filled on the way up, and then you have a beautiful, just like easiest trade of your life. Okay. So someone says, why 14 times your money if I use 1K times 7%, just 7? No, I'm saying if you use $1,000 risk, $1,000 risk. Okay. So what it means is the difference between your entry and your stop loss is $1,000 in terms of risk. So that means, so let's go in here. So let's say you have $100,000 account. You're going to risk 1,000. Okay. Let me show you guys how to calculate this on a calculator. Okay. So let me show you guys how to do this. Come on. It's not coming. I need a new laptop. This one sucks. Okay, anyways, let's do this together. So here, the entry price is 55.02. The stop loss is 54.93. Okay? So we're going to go here to the calculator online. Calculator. So I have a video on this, guys, so you can watch it, but let me explain because I don't want you guys to be confused. So 5502. Now the calculator comes. Look at that. So dumb. Anyways, 5502. Okay, and then what was the stop loss? 5493 minus 5493. Okay, so that means we're risking 9 cents per share. Okay, so let me see if let's see. So we're risking 9 cents per share. So what it means is if we're risking 9 cents per share, we do that times 14. Okay, $1.26. So basically, you're risking 9 cents per share, and you made $1.26 a share. So you made 14 times your risk. And whatever, so all you have to do now is you have to calculate how many shares you want to buy. So let's use this as an example here. So let's say I want to risk $100. Okay. So if I put in $100 right here, then it says I need to buy 1,111 shares, right? So in order to execute this, you need margin. Okay. So this is how you trade shares. So I'm giving you guys a bonus lesson on shares, and we'll compare it to options. So here we go. So we're going to buy. Okay. So let's say in both situations, we are going to buy $100 worth of risk, and let's see which one performed better. Okay, so let's write this down. So option 1, buy shares. So we're gonna have to buy how many shares? 1111. So we're gonna risk $100, and our profit is going to be 1,400 because we got to 14 times our risk here, so we made $1,400. Okay, so now let's go to the option play. So option 2, options, call. Let's just say calls. Okay. So we're assuming you did everything with the opening range breakout. Okay. So now this is what we're going to do. So we're going to go here. We're going to type in option chain MRVL. Okay. So we're going to go here to this. And then, so we have to pick the call. Okay. So let's go back to the chart. So when you entered, your entry was right here at 5502. So let's say you bought one strikeout. Okay. So 56. Okay. So you bought 56. So let's go to this chart. Let's go to this graph here and let's see what the price was. So you're going to be entering. I hope this is not confusing you guys. I'm trying my best not to confuse you guys. So you're going to actually be entering at 9:35. Okay. So 9:35, which is here. The contracts are going for 22 cents. All right. And let's just say you're able to take it all the way up to 54 cents. Okay. So you guys follow me there? 22 to 54. So now let's calculate that. So 22 cents. Okay. Just assuming you got the best out, you got out at the best, which is not going to happen, but we're just doing it for simplicity. So you made 145%. Okay. So what that means is back to here, you're going to buy. Okay, now we have to figure out how many contracts you're going to buy because of the price. So if it is 22 cents, say you buy 5 calls. Okay, because just assume that whatever you put in can go to 0. So we're going to do 5 calls. Okay, so we're going to go back. We're going to buy 5 calls. And then we made a profit of 145%. Okay. So what does that mean? That means it's going to be 150. Let's just round up 150 times 5. That's your profit. Let's get the calculator now. So down here, 150 times 5, $750. Okay, where are you? Where are you? Okay. And feel like I don't know if I did anything wrong there, but if I did, please let me know. So in both situations, we risked $100. Not 150 times 5? Am I wrong? It's like 140 something, right? I'm rounding up. So let's look at this. In both situations, you risk $100, okay? But with shares, someone's saying the call went from 21 to 41. Hold on a second. 21. I see up here at 54 for Marvel. Okay, anyways, let's just stick with what I'm saying for now, just for illustrative purposes, all right? It's not going to be exact, but what I'm trying to show you is this. So you risk $100 in both situations, but with shares, you actually come out better. You come out with $1,400 versus with calls, you only come out with $750 profit. And the question is, why is that? Okay, and the reason why that is because the volatility, some of the volatility was priced already into the call. Okay, but what is the benefit of doing the call? The benefit of doing the call is that you can hold it into tomorrow. Okay, if you hold the shares into tomorrow, because you have so many shares, if it gaps down, you're going to lose a lot of money because it might gap down below your stop loss. So let's just say Marvel gaps down all the way here tomorrow. If you have shares, you're stuck with everything and you lose a lot of money. But if you bought options, you can only lose what you put in. Okay? So you can only lose what you put in. So that's what the main benefit of option is. Options don't, if the stock gaps down the next day, you only lose your initial investment, right? But you can see from a day trading perspective, the shares actually outperformed. And one of the reasons is because the option price was already priced heavily. And that's because the morning there was a gap up. So all of these little factors, they play in, right? But the other main benefit of options is what? You don't need margin. You don't need a big account. You can do a cash account, right? And then with a cash account, you don't have to deal with what? PDT rule. See? So most people with a small account want to do they want to do calls because they don't have PDT rule and they don't have enough capital. But what I'm trying to show you, in some cases, the shares might actually make you more money. But obviously, you need more money to buy the shares because you need margin. And then you have the risk of overnight. All right. So I know that was long. I wasn't really planning to talk about that, but if that helped you guys in some way, hit me with a 1. Hit me with a 1 if that helped you in any way possible. All right, I see some 1s. Thank you. Okay. So there's one more there. So basically with this type of movement, this is what I call a gap and go. All right. So we have someone said, "This is fantastic. You opened my mind beyond what I've read in books." Thank you, brother. How many shares did you buy to make 1,400? In this case, you have to buy, look right here, 1111, 1,111 shares. That's what you need to buy. Okay. So this, I want you guys to take a screenshot of this. This is what we call the perfect gap and go. This is called the gap and go. This is actually in my playbook. I have a playbook of my plays, just like any sports team has playbooks. This is my playbook, and this is what I call a gap and go. Gapping above the previous day's high with trap bears can lead to a trend day for the bulls. And one of the plays you can do, opening range breakout, you can look for the inside bar. The one thing that I noticed about these gap and go plays is a lot of times we do not retrace deep enough for a good Fibonacci play, right? We don't. Instead, what happens, you see this middle line here? This is the 20 exponential moving average. When we have a gap and go, the 20 exponential moving average becomes basically the line of support. And this will line up with the VWAP. For those of you that trade the VWAP, this will line up with the VWAP. Okay. So somebody write that down somewhere. Gap and go, take a screenshot, put it in a Word document and save it, and talk about the criteria. What is the criteria? We must have trap bears. We must gap up above the previous day's high. Okay. And what are the things we can do? Opening range breakout, inside bars, fibs, a lot of things. All right. So here we go. My brother right here, Vinod, $5. Thank you very much. Thank you. I very much appreciate that. And I'm happy that you guys are learning something, and I'm not holding back anything. You know, I'm telling you guys what it is, because I don't have a benefit of selling you on options. Like I don't have, like, I'm not sponsored by Black Box or White Box or Green Box or any of the box that is gonna like show you guys option flow and stuff like that. I'm just being honest with you. And in this situation, buying shares would have made you more money if you took the orb with the stop around halfway through the candle, right? There's also the thing you can consider is like, well, I could have just stopped out on the option. Like I could have stopped out early. Okay. But when you are having expiry on Friday, the premium is going to die quickly. And it's hard to manage option stop loss. It's very, very hard because it moves so quickly. So I'm just speaking on my experience. When I play options, I basically just say, hey, this is what I'm going to put in, and I'm willing to lose it all on most of the plays. And that's why I keep it small. All right. So let's move on. Let's look at the 15-minute chart to see if there was anything in particular. What do you guys see on the 15-minute chart? Give me 2 setups that you guys see on the 15-minute chart that you could have taken. Quickly, so we can move on. We spent 36 minutes on one stock, but we have a lot to cover. So what are the 2 setups that you guys see here on the 15-minute chart? So for those of you that don't want to trade the 5 because you are just, it's too fast and it's new, then you can go to the 15. The main thing is get yourself in the game, get some experience under your belt, and start practicing. If you can't do the 5, you do the 15. So we have inside bar, inside bar. Yep, exactly. Inside bar, inside bar. Good. So you guys know that. So let's move on to Neo now. So Neo, all right. So let's go on. So Neo, here's the previous day's high right here. So the first 5-minute bar on Neo closed with a big hammer, okay? And it pressed up right up against the previous day's high. All right. So anytime we are pressed up against the previous day's high, that's always a good opportunity to look to see if we can squeeze it, right? So got the trade paradox right here with the super sticker. I love that face. We have another brother here, Emmanuel, with the, oh my God, is that 50? Wow. Very much appreciate that, brother. That's 50. That's a big 5-0. Thank you very much. That is awesome. Thank you, brother. Really, really appreciate that. That helps me a lot. Helps me a ton. Thank you very much. All right. So the first, I got another 99 cents. Hold on a second, guys. I got to show this man out. The trade paradox with that. I see your sticker, brother. Love it. All right. So here we go. First 5-minute bar, hammer, pressed up against the previous day's high. If we look at the daily chart, okay, go back to the daily, it closed with an inside day, right? So we close with an inside day. So we know we're pressed up against the previous day's high, we can have a move, okay? So we do get a move. So this pop right here, if you play this pop from here to here, that's at least double your money, okay? So let's come in here, take that opening range breakout. All right, so we'll put it about halfway through the candle. So the next candle opens here. Okay, you see it opens here. It breaks through, pushes up. Let's see what we can get. So you can at least get 2.5 times your money, right? So that's a good, beautiful, beautiful setup right there. So, and then what's the next play? You guys tell me, what's the next play that you see here? What's the next play? What's the next pick you see on Neo? And then we're going to talk about some of the fib plays that I see here. All right. So another thing that, so we're going to draw the fibs. So let me know what the picks that the other setups you guys see. Inside bar at the top, short opportunity. Beautiful. Look at that. Like if that doesn't call your name, I don't know what else will. Look at that. Inside bar here at the top of the range, we had a big push. So all we do, we take the breakout of the bar breaks below, we take that short, and that, like, look, you can just take that all the way into the close. That's a home run trade right there. That's a home run trade right there. That's a beautiful, beautiful puts trade, okay? So now, let's draw the fib from the high to the low, okay? And here we go. I didn't even draw this for the whole day, but I knew that was on the 618. I knew it because I could just from so many times of drawing fibs, I could tell you exactly where it is. So there's a 618, right? So let's say you missed the long, you missed the short, okay? You're chilling, you're relaxing. So you know, okay, you don't want to short down here. So let's talk about what rookies do, okay? This is what a rookie does. Let's talk about what a rookie does. When the stock comes all the way down here and then makes a new low here, the rookie is programmed by other traders that are not teaching them the right way. Oh, when it breaks the low here, we're going to short. And right here, the rookie trader is shorting and the algo is buying right there. Okay. And you don't want to short here. Wait, let it pull back into the fibs. This is what I teach in my book. This is what I'm trying to teach you guys. This is called the afternoon leg right here. This is the afternoon leg from my book right here. We push down, let it pull back in. When it starts pulling back in, you can either layer in your contracts. You can start off at the 382, put some on the 50, put some on the 618. You can have a stop loss at the high of the day, or you can pick one, say, I'm going to wait for the 50 or the 618. It comes back all the way in here. We have an inverted hammer, absolutely beautiful inverted hammer right there. You take your puts right here, okay? And then it just flushes. So got my brother here, B Gotti with the 20. I'm getting rich tonight. Thank you very much, guys. This is really, I'm gonna have a great day tomorrow. I'm gonna live the dream tomorrow. I'm gonna get a latte and a cookie and a croissant. I'm gonna be living the dream tomorrow. So thanks, Rich. Gotta run. You're awesome as always. Content's very valuable. Thank you, brother. Have a good night. Michael Florana said, but what is the bigger time frame reason to take and look for a short? So if we go to it always starts with the daily chart, right? That's why I run the scanner. So if we look at the daily chart, we can see that the previous day had an inside bar. So we know we're likely going to break the inside bar, and we do break the inside bar, and we make a new high. But not every single time is it just going to continue higher. And a lot of times you're going to see something called the false breakout. And this is what I talk to you guys about all the time, right? I talk to you about the false breakout. So this is what we call a false breakout. We break out, we pause, the inside bar gives you an opportunity to try. You don't know, nothing is for certain if it's going to go down or up. You don't know, but you know if you try here, you have a good risk to reward. And if it works, you're going to make a lot of money. That's how you have to think as a trader. You have to think about, I don't know 100%, but is it worth my money to take a chance? Okay. All right. So if we're okay with Neo there, if we're okay with that, hit me with a 1 if we're okay with that. And then I'm going to start flying through some of these, and then we are going to look at some picks for tomorrow. See, I got the ones, right? Hit me with the rapid fire ones. There we go. See them now. Okay. Let's proceed. So, and then Visa was today. All right. So here's an example. Okay. This is what we call a gap and crap. All right. So we know what a gap and go is now. And now we can see what a gap and crap is. All right. So this is a gap and crap. We gap up, we try to break out, we fail, and then we just continue selling off for the rest of the day, pretty much. So if you took Visa calls, you pretty much end up with a loser on the day unless you had a limit order somewhere along here, or unless you waited for the retest. You see this? This is the retest of the previous day's high. So if you bought calls at the previous day's high retest, then you would have been able to make money. So this is the thing, guys. It's not always going to work. You might think it's a gap and go. It might not happen. So that's fine. You have to be willing to cut your losers and move on to the next trade. Let's look at Oracle. Okay, and I really like Oracle here for a few reasons, and I'm going to show you guys some tricks on this one. Okay, so Trade Paradox, my brother again with another sticker, and then we got right here Michael Floreno with the $10. Thank you, brother, and another super sticker. I love your stickers, guys. Thank you so much. So I might be able to, I think I can get a steak tomorrow. I'm pretty sure. So let's discuss Oracle. First 5-minute bar is a green bar. Okay. If we take the opening range breakout on this bar, do we make money? Yes or no? So hit me with the 1 if yes, hit me with the 2 if no. If we take the opening range breakout with Oracle, do we make money? Yes or no? 1 for yes, 2 for no. So I see a 1, I see a 2, I see a 1, I see a 2. This is good. This is good because some of you don't understand. So let's do it together. Okay? So we're going to hit a replay. Okay? So the first 5-minute bar is here. Here's the high. Here's the low. What the opening range breakout strategy is, if it breaks the low, we're going to buy puts. If it breaks the high, we're going to buy calls, or we're going to short shares or buy shares. Okay? We're going to go long. So what happens? Boom. Look, the low breaks. The low breaks, not the high. The low breaks. So this is a short signal. Okay? So this is a short signal. Okay? So how would you set up the trade? Well, you're going to hit short. You're going to short on the low. Okay? If you're conservative, you put the stop above the high. Okay? If you're aggressive, you can put it halfway through the candle, or you can use a fib. Okay? Whichever one. So it opens here. It flushes down. Boom. When it breaks this low, you're filled short. So you're either puts or you're shorting shares. And then let's just go to the end. Okay? And that's just an easy one. Like, these are easy trades, guys. Easy. Like, the market has been giving freebies these days. Look at that. 6 times your money right there. So if you're risking $100, that's $619. If you're risking $1,000, that's $6,190. Okay? If you're doing 10,000, that's 60,000, etc. Right? The only thing that changes is the number of shares. Every time you increase your risk, the shares are going to increase because you have to buy more size. Okay? So hit me with a 1 if you guys understand the orb now. Okay? I was a little bit surprised we saw so many 2s, because the opening range breakout means, if the low breaks, we go short. If the high breaks, we go long. So tell me now, hit me with the 1 if we understand the orb better. Okay? Watch the opening range breakout video that I did on YouTube. Watch that. All right? And then what are the other setups we have? We have a nice inside bar. We have a nice double inside bar. And we have another inside bar. We have all of these inside bars on the way down to take them down. Very, very nice, beautiful trades. All right? With the inside bar, when you're taking these, you don't want to get too tight and too fancy. Put your stop loss either at the high of the day, or put your stop loss above some of these bigger bars when you're trying your play. Okay? Because you want to give the trade some room to breathe, especially when you're new to trading. Okay? So that's beautiful right there. And now, if you guys want to see a bonus secret, you got to hit me with a 1. Like, I want to see a lot of 1s. No, actually, hit me with the 3. I'm going to show you guys a secret. Okay? A secret on the fibs. Hit me with the 3 if you're ready for that. All right, and I'm going to get the fib tool. Okay, see the 3s. All right, so these are things, these are the secrets that it's taken me a long time to develop, so make sure you don't tell anybody outside of this room. Okay, so we're going to take the fib from the low to the high. Okay, so this is in my book. All right, and I have a trader that every single day, he always says, guys, why don't you just follow Trading Wars 10% extension? Why don't you just follow his 10% extension? And why don't you just buy his book? So I'm going to put the 10% on right now. Okay. So we're going to go to here to style. I'm going to click here. There's the 10%. Okay. So how this works is you short on the 10%. Okay. You have a limit order on the 10%. You put the stop loss wherever you want, to be honest, as long as it's above the 272. Okay. So let's leave it. Let's give it some room. Let's go over there. Okay, so you have a limit order. This is, friends, this is what I call predictive trading. Predictive trading. This is how the professionals trade. When we open here, okay, when we open here, I'm telling myself in my head, if we break out of the previous day's high, I can try a short up here with a stop up here in case it's a false breakout. Okay, and this, if you trade like this, you're going to get options at a cheap price because we are buying options as they come to us. Okay, so we open here, we break through the previous day's high. When we're pushing through the previous day's high, I'm like, okay, this is a chance for me to try the short because it could be a false breakout. And also, once I see this wick, you see when this candle closes with this wick, I can see the rejection fit. I can see it. Like you could see, look, there's shorts, there's a rejection. So that's another signal for me. Try it, just try it. See what happens. Try the puts right there. Puts are going to be cheap. Puts are going to be dirt cheap right there. Okay? And then bam, that's it. Like that is actually exceptional trading. That is trading at its finest. And let's look at the Oracle option chain to see what that was at that time. Okay, so let's go here. Oracle options chain. Hit me with a 1 if that was good, if you like that. Right, so the puts are going to be, let's say we did, let's do 78.50 puts. So here, 78.50. Is that puts? This looks so weird. Okay, let's do 78. So I'm just trying to show you guys like how the puts would move, because we know what the shares, we know how the shares are going to move because there's no time decay, there's no volatility, so we don't really have to worry about that. Okay, so here we go. So in the morning right here, this is the morning push. So right around, let's say 9. So pretty much you're getting in the first 5 minutes. So right around here somewhere, you get them for about 20 cents. They went all the way up to 58 cents. So basically 3 times your money. All right. So that's pretty much what that equates to in options. A 3x. All right. And if you missed it, like we said, we had the opening range breakout, we had the inside bars. How do you know when to sell the puts? Every time you get a green candle, wouldn't you be scared? No, you don't. You won't be scared if once you get experience trading, right? Because this is a specific pattern that I'm saying. This pattern is called the false breakout. Here's the previous day's high. What I'm saying here is if we break above and then we do a fake out, because fake outs happen a lot, and a lot of you guys have been trading for a while, you know that, right? You try to buy the breakout, shit goes the other way, right? So that's why the opening range breakout is a really nice way to get in, because you can wait for 5 minutes, let things settle down, and then come into the play, right? But you shouldn't be asking yourself, is the candle green, is the candle red? All you have to ask yourself is, what's your risk to reward? Okay, if I risk, a few $100 up here, I have potential to make, 500 to 800 bucks. That's worth it. And that's the way you need to be thinking. Maxwell says, how do we know to take the short or long when it breaks an inside candle on the 1 day or 5 minutes? Is it just when it breaks a high or breaks a low? So yeah, you can do break the break the high, break the low method. That's the simplest way to do it. You can also use the Fibonacci to help you with those inside bars, right? To help you pick a direction. For example, here, if we do the Fibonacci on the micro from here to here, okay? So we can see that's a perfect 50 rejection. Like, guys, look how accurate this shit is. I mean, it doesn't get better than that. Like, I don't even know what to tell you guys. It touches the 50% one. Okay, the 50% is 78.75. It touches the 50% to the exact penny, 78.75, and then just flips right over. Like, if this doesn't show you something, I don't know what else will. It's actually just like watching art. I don't even know how to describe it. So right here, when I see this inside bar, I see the fib is here also. So that's giving me confidence to go short. You see what I mean? Right? So, I mean, hit me with a 5 if this blows your mind. Right there. Like sometimes I just watch, I just don't understand like how can it be so perfect? But when you think about the market just being run by robots, makes sense, right? The robots are just taking programs, they're just plugging in numbers, it's 50%, blah, 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 whatever, right? But like when you can see the market, like I'm trying to bring this to your table right here. When you can see the market from these eyes, from these strategies and tools, you will never be the same. Okay? Absolutely just amazing. And then let's move on to Tesla. So, I mean, if you didn't make money on Tesla today, I don't know what to tell you. I really don't know what to tell you because we've talked about this many, many times. The first time was yesterday. We had that Tesla gap up, right? We had a gap up above the previous day's high. This is what we call a gap and go. We talked about it just now. Orb, opening range breakout, take that up. Inside bar, take that up. Over here, same thing. We gap up above the previous day's high. Opening range breakout, take that. Inside bar, take that. It does not get better than that. It's just literally the market giving money away to people that have a plan. Okay? All right. So there is Tesla. And then what Fibonacci is this on? Let's see how smart you guys are. Let's not smart. Let's see how much experience you guys have with the fibs. What Fibonacci is that hammer candle sitting on? What do you guys think? Somebody tell me. What Fibonacci is that hammer candle sitting on? And how much do you guys want to bet it's sitting on a Fibonacci? I see 618. I see 618. I have a 618, 618. Okay, let's do it. Low. Wow. Look at that. This is not, okay, this is not a falling wedge, an ascending triangle, a descending triangle, a cup and handle, a broom, a spoon and fork. It's not. This is a 618 Fibonacci retracement. That is why we bounced there. No other reason. And like sometimes when I look at these charts, I just feel like to turn this thing off because it just blows my mind. I just, you need to love this. You need to love this. You need to understand. Like, look at this stuff. It's just crazy. All right, and now let's take it up one more notch. Let's take it up one more notch. Okay, how many of you guys have heard of the opposing leg? Hit me with a 1 if you've heard of the opposing leg. Hit me with a 1 if you've heard of the opposing leg. You guys heard of it. So we got a 2, so not everyone's heard of it. So most of you guys know. So I'm guessing most of you guys have my book. That's why. All right. So here we go. Let's do the opposing leg. Honestly, I'm giving you guys away all my secrets. It's just crazy. It's actually crazy. Here we go. High to low. Pull it down a little bit. There we go. 50%. These guys see that? And look where we end. We pull back to the 50% of the short and we trade to the 10% extension. I mean, is that a miracle or what? Look how accurate this shit is. And I tell you guys, when it comes to high volume stocks that are trading, Teslas, SPYs, it's just insanely accurate. But people don't want to, I don't know. I guess people don't want to share it with you guys because they don't want you to know the secrets. That has to be that's why. I don't know why else they're trying to show you falling wedge and all. I don't know why else they're trying to show you that unless they just don't want you to know. I don't know. All right. So I promised you guys every time you come here to these live sessions that you're going to get your mind blown. Hit me with a 7 if your mind is blown. Good. Good shit. That's what I like to see. All right. So there we go. So those are the plays today. There was one more that I put in the bonus tweet. This one was just disgusting. Like, I don't even know what to tell you guys about this one. So this one was a gap up above the previous day's high. The orb worked. Okay, here we go. Orb. Orb. So someone's saying, how do you know 50 or 618? There's multiple ways to enter the position. One of them is called the candlestick method, and then one of them is called the average in method. And those I go through in detail in my book. So it's pretty long concept. So if you check out my book or check out my YouTube videos, right? And then here we go. So just looking at this chart right there quickly, we have a gap up, opening range breakout, inside bar right there. Those are all just money, free money. Okay. And then right here at the top of the range, a little small inside bar calling your name to short. And like, if you took this somehow, I don't know how, but if you saw that inside bar there and you wanted to short it, you would have just been you would be in the Hall of Fame, pretty much. So that's a nice one. So what do we have set up for tomorrow? We have Moderna. Okay. Nice Holy Grail. So this is Moderna Holy Grail. It's looking to make new all-time highs possibly tomorrow. We have an outside bar and an inside bar. So basically what we got to do is we got to look at the open. How do we open? Do we gap up? Do we gap down? Like, you guys know the plays by now, right? How do we open? Take your plays, play small, and continue. Okay. Plug is just a normal inside day. I like it because there's a lot of option. I saw when I looked through the option chain, the free one, there's a lot of volume there in plug. So maybe it could have a big move tomorrow. We have here Virgin Galactic, a nice one also. I think this one is sitting on a bigger fib. Let's take it from the daily chart from the high to the low. Okay, so we broke through the 50. You see how we tried to reverse at the 50? So this is an example of like, it works just for a second. You see that? We tag the 50, we come down, and then the bulls take control. We push through. So next up, we have the 618. Or if we start pulling back down, then that would be also like a false breakout. Okay, so let's see what happens with that. Fubo, basically the same thing, right? And Airbnb, it's just been going sideways for such a long time that it's due for some type of move. So that's why that's on my list, right? And then XOM, also nice inside bar pressed up against this double top here. So let's see what happens. And then I have a few more, and I think I posted them already. Let's see. I have a few more. I posted it, but then I put it on a delayed timer because I wanted to do the session first. Yeah, so it's gonna come up right after this. And yeah, I think that's it. So to play Lotto Friday, you have to understand something. Oh, I want to talk about Chipotle too. But to play Lotto Friday, you have to understand that essentially, if you're not in the money by the end of the day, so if you're not above your strike price for calls or below your strike price for puts, okay, if you're not there, your option premium will be zero. Okay, so it's high risk, obviously. That's why people say it's high risk. My approach to doing that Lotto Friday play is doing small bets across 3 or 4 different stocks and basically just seeing, just playing for the lottery, like basically. That's why it's called lotto. Because if you hit it big on one of those and there's a big move, you can make 10, 15, 20 times your money, sometimes 100 times your money if it's like it just goes insane. So that's possible. Okay, so that's what we look for on Lotto Fridays. Whereas when we get options on Mondays and Tuesdays at the beginning of the week and Wednesday even, there's enough time that you can actually manage it almost like shares because you have the time value there that you're not going to really get decayed too much, right? So just want to tell you guys, like, that's the difference. That's why it's called Lotto Friday. That's literally why it's called Lotto Friday. It's like playing the lottery. Whereas options at the beginning of the week are more structured. There's more time that you have on your side, right? So what I'm gonna do, probably set up a bunch of trades with the bot. I'm probably gonna do 3 or 4 trades with the bot and let it do its thing and see how it goes. And what I want to do is I want to just keep, like, I'm putting my own money in the bot. If it loses, if it wins, whatever. I'm just interested to see how the artificial intelligence can perform. And if it can perform better than me, even better. So we'll see. Does the lottos, let's say it goes 100% and then just stops there, will it decay or stay to apply day by day? If it expires on Friday, you have to calculate the intrinsic value. For example, if the call strike is 20 and it closes at 22, you're going to get $2 worth of premium. That's because that's your intrinsic value. That means it's worth $2 because you have the right to buy it at 20, but it's at 22. Okay, so you're going to get that. All right? And just make sure you sell your options by the end of the day, right? If, like, because you don't want to get assigned or like whatever, right? If you don't sell by the end of the day, nothing usually happens. It just goes to zero or whatever, and it disappears. Like, normally that's what happens. But if you have a gain, try realizing your gains when you can, and don't wait till the last minute, because I've had problems with like that in the past. Which bot are you using? I'm using Trader Workstation, trying to play around with that, and just basically, working with the orders overnight and just letting it do its thing during the day. So the last thing I want to talk about is Chipotle Mexican Grill. I want to just talk to you guys about the fractal nature of trading again. So Chipotle Mexican Grill was something that I shared in the newsletter. And it's also this one. We also took this trade in the private swing room together. And I just want to talk to you guys about looking at inside bars on the higher time frame. So a lot of people don't look at these time frames that I'm going to show you. These are time frames that I like looking at. 2 week, 3 week are ones that I pay attention to, because the higher time frame you go, the more volume there is in a candle, right? Obviously, because there's more transactions. So I like looking at the 2 week and the 3 week. And what I did here with Chipotle is when we close with that inside bar. So this is how it looked to me, right? So can I hit replay? Yeah. So this is how Chipotle looked to me last week. And basically all I said here was, okay, we have a nice double hammer pattern. Looks pretty good. We have the 20 EMA right there as support. So I set up this trade here. Entry was 1408.16. Stop was 1354.50. And then today, this week, it was just like easy money, right? If I just play it out, we hit 1.5 times our risk. So in this trade, risking $1,000, we would have made $1,500. Okay. And basically from here, my stop loss goes to break even now, like that. And then whatever happens, I don't care, because I've already scaled out and a stop loss is at break even. But I'm pretty hopeful, and I think based on this price action, that Chipotle can probably test new all-time highs. But if it doesn't, it's okay. I have my stop loss to protect me, and I've already made money on the trade. So, the swing trading is nice, because if you're a busy person, you can just set it up on the weekend and just leave it. And some news that I've been approached by a few people about doing some type of business with these trades, and like maybe managing some funds and stuff. So I'm pretty excited about that. But when it comes to large amount of money, I will mostly do swing trades, because the day trades, sometimes there's problems with slippage and getting size. When you're trading with $1 million plus, it's hard, because if you're going to have slippage on options for sure, right? You're going to have a spread. So shares on a swing trade are just easier to manage. So that's something that's coming up in the future for me. So I'm really excited about that. But yeah, but otherwise than that, do you guys have any questions about anything? So I see one here. Why are you using in the money calls on these? I just looked at the in the money calls for this Friday. A lot of them had a heavy amount of volume. So I just think it'll be better for the spread. So that's why I was deciding to use those. Wouldn't sharing these strategies get backfired if institutions know your play? Well, there's only 158 of us in here, so our trading is not going to make a difference to the market, really. We are actually trying to copy the strategies of institutions. We're not trying to beat the institution. We're trying to trade with them. That's why we use the Fibonacci, because that's an algorithm style of buying, and the algorithms are what the institutions use. Now, how do I get infinite money? That's the hard part. In trading, you need capital. That's why I always try to preach to you guys, protect your capital at all costs, because once you lose your capital, you can't trade anymore. So try your best to follow the 1 to 2% rule and just work hard and save your money. That's what I've been doing for all these years. Like, I don't have any inheritance or anything like that. I come from the bottom. I've just been saving my money and working hard, and now I have a decent amount of money. Took me a long time to get there, but now I can, size in a lot. But when you're on the grind still, you just have to be learning and appreciating the process, and then be ready when your name is called. What's a holy grail? Holy grail is outside, inside bar. So the first bar is an outside bar, the second bar is an inside bar. All right. Any more questions, anybody? Random upload says, can you sub to my channel after your stream? I'll send a comment. All right, I'll check out your channel. I'll check it out. Is it 272 usually the bounce? 272 is a good bounce for gap and go. So when you're doing gap and go, look for the 272. When you come out with new swing trades, every Friday night after the close, I run the scanners to find the trades for the next week, and then I post the trades for the next week for the room. Good night, all. Trade well tomorrow. Rich, enjoy your weekend, brother. Take care, brother. How do we get your book? All right. So let's do that. So we go here, tradingwars.com. I'm still doing this promotion because it's been doing pretty well. So my book here, if you buy my book, you get 1 month for free in the private swing trading room. A lot of people like that, and I think it's a fair deal. And here's some pages from my book, just showing you guys. And here is a free playlist that you can watch on Fibonacci, so you can get some more understanding from the videos that I did there. And then the swing trading room, since you guys were asking about the orders. So these are all of my results: January, February, March, April, and May. I have basically about a 70% win rate on the year. Obviously, there's going to be some losers, but I've been doing pretty well this month and last month. And basically every one of these trades, so let's use Procter & Gamble as an example. I post it on the weekend, so you can put it in the broker before the Monday open, and then you can just set your trade up, and it can be completely automated. On a gap, why don't you start the fib where the gap start? You can do that. Yeah, that's one of the things I talk about in my book. You can do that. Like when you have the fib, you have to understand with the fib, you have to say, you have to keep your approach the same, because either you're going to trade, like I show you guys, the intraday, the small micro fibs on like the 5 or 10 minute candles, or you're going to trade the morning leg or the afternoon leg. You have to pick which one you want to do, because otherwise you're going to, you need to be consistent, right? I like your option triggers, but you always enter on your fib level, which is hard, looking for alerts. Yeah, I mean, you can do the trigger method, but like we've seen this together. Like we've done sessions together, right? And you guys can obviously see using the fib method or using the orb sometimes is a lot better than using the trigger, because the trigger is basically like when you're using options, right? When you use a trigger, you're getting in at a bad price from the beginning, because you're getting in on a breakout. So if you're buying calls, it's already going up. Whereas on the fib, it's coming down. So when you buy it on a fib, it's coming down into your option and you get it for cheaper. But both of them work over time. What really matters is how are you managing your risk? How long is swing positions open for only? Or are you trading commons and not options? I'm doing commons and options, but mostly commons because sometimes the option spreads are bad. So I like to stick with commons. It lasts anywhere between 2 to 6 weeks usually. Sometimes it's done in the first week, like especially if we have a loser, you'll pretty much get stopped out right, like maybe in a few days, because that'll be a false breakout. Is the entry the amount you're using in the initial trade? Yes, the entry is where we enter. That's the entry price. A stop is a stop, and the first target is always at 1 to 1. So 1 times your risk. Okay. All right. So if I don't see any more questions in here, I really appreciate you guys spending 1 hour and 14 minutes with me. I mean, I hope that you learned a lot. The whole goal of this is just to help and give the knowledge and to just inspire you guys to achieve your goals and dreams and just keep pushing for it every single day. You are entitled to whatever you want in this world, whether it's money, health, fame, whatever you want. You can have it, but you got to put in the work. And my job now, where I am in my career, is to be able to give back to the community and to help people. Just like when I was coming up, I had a few people that gave me a helping hand. I had a lot of people that actually kick me down, but let's not talk about that. But there has to be somebody that's willing to extend a helping hand for you to succeed. I'm thankful for the people that helped me succeed, and I'm trying to be that person to give you the hand to help you succeed now, because I know a lot of you have already gone through the furus. I already know that. You don't have to tell me that. I know that a lot of you guys have been scammed and robbed and tricked, and I'm here to give you the hand that you need. All right. And that's it for me. Stay positive, help your community, and let's just get it done, guys. Let's get it done. Let's make money. We need money to be the best possible version of ourselves. And because with money we can give openly to everyone around us, and that's why it's important to me. All right, we're out.